You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options trading and trending and analysis and volatility and skew and open interest, all that fun stuff. We got you covered here on TWIFO. My name, as the man said, is Mark Longo, and we got a fun panel joining us today to help us break down all this good stuff. Let's get right to it. Starting off with my cohort, my partner in crime, the man who's anxiously counting down the moments until Election Day, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here called Quick Strike. Mr. Nick, welcome back to the program, sir. How are things going as you're counting down the days, sir?
Oh, I'm doing okay, looking forward to the show. Got some interesting stuff to cover, I believe. So, and good to have some new guys on as well. It should be fun. Let's
do a cheap plug here while we're at it, sir. Obviously, wherever you are listeners, you should make sure you register and go out and vote. But in particular, maybe if you're out in the suburbs of Chicago and you want to throw a vote, which district is your wife running in, sir?
Boy, oh boy. See, I would never even do that. I leave it to you.
I did it for you. I did it for you. I know you would never do it. That's why I did it for you.
I would never do that. We're in District 48, Illinois District 48. So State Representative Tara Costa Howard, soon to be, hopefully. So
there you go. So counting down the moments over there in the Howard household till Election Day should be interesting. So wherever you are, make sure you get your votes out. In particular, if you're out there in 48, then maybe you have a name on the ballot. You may want to check. No suggestions here. Just giving you food for thought here. We're apolitical on the old network at the end of the day. And also joining me a little bit closer to home, in fact, to my immediate left, old friend, glad he's back on the show. He's been traveling hither and yon of late. Mr. Sean Smith, the Managing Director of Derivatives Licensing. It's a long business card, sir. Over there at FTSE Russell. Sean, welcome back to the show. It has indeed been too long.
Mark, it's good to be back. Thanks for having me back on the show. I look forward to a fun discussion today. And Nick, best of luck to Tara.
You and I saw each other not too long ago at an event in Chicago, but ironically not on the show. So glad to have you back here in the studio, even though next time, sir, I thought we had a standing agreement, gourmet burgers every time you came in the studio. I see you've already welched on our deal.
That wasn't, I thought that was at my discretion.
I didn't know there was discretion involved. I thought that was part of the meeting. I thought that was in the ink of the contract there. Gourmet burgers every time. Okay, next time. We'll talk about it next time. We'll see. Or maybe a filet. I wouldn't hold it against. There's a Gibson's across the street. All sorts of good stuff.
Filet sliders.
Filet sliders. There you go. Now you're getting creative. I like tea. See, that's what I like there. And also joining us, holding down the CME Group hot seat. He's a newcomer to the program and indeed to the network. He is JB Mackenzie, the Managing Director of Futures and Forex over there at TD Ameritrade. Easy for me to say. I've been talking a lot today, JB. JB, welcome to the program.
It is great to be here. Looking forward to it. I am a little disappointed that I don't get any sliders or some burgers that I would have thought Mr. Smith would have come through with. But next time, my friend, next time.
JB, as we are wont to do with all of our first-timers here on the old network, why don't you go ahead and give us a little bit of an overview of your background in the space and what it is you do day-to-day as the MD of Futures and Forex over there at TD Ameritrade.
Absolutely. So I came into the space a little over 17 years ago from the equity side, where I started working with Goldenberg Haymeyer, had a small prop shop up there, worked on their technology, really focused in on product as well. And over time, I moved on from there, moved over to MF Global for a little over a year. But one of our largest customers while I was at Goldenberg Haymeyer was Thinkorswim. And the Thinkorswim platform, for those of you as option traders.
Never heard of it.
Yeah, exactly. They were one of the big ones. So we worked with them on opening up their futures trading platform. And when TD purchased Thinkorswim, we said, hey, maybe there's some opportunity here with this futures offering it out to our retail customers, who at the time were about 6 million. And what we started to do was started to build this futures product from scratch and really started to develop it out, brought it to the sort of the masses, and we just saw incredible interaction and engagement from that customer base. And so as we've been building it, it's been a combination of building great tools from the equity option space to the future space, but then also figuring out how to partner with people like the CME and the FTSE Russell, like with Sean, on developing new product for retail traders. So as we've been building our futures business, it's been really focused on how do we take tools, toys, and strategies, bring them across so that every trader, when they need it, have access to the markets. That's the beauty of the futures markets. 24 hours a day, 5.5 days a week. You get a chance to really react to news when it comes out versus having to wait until 7:30 in the morning or 8:30, depending on where you're located.
Yeah, and I like to see TD really put an emphasis on futures and futures options these days. I talked to a lot of brokers these days. Seems like some of them, when markets are kind of crazy, they kind of retreated from that space a little bit, which I think has always been counterintuitive to me. I think you want to have the broadest product offering available so you can attract, right, obviously the broadest array of clients, and obviously a lot of the savvy ones, particularly I'd imagine last year when volatility in the equity space was, shall we say, anemic, were looking elsewhere for places to trade and places to find volatility, and they were looking, a lot of them, in the commodities and the commodity options. So if you didn't have a robust offering there, you were kind of behind the game. So I'm glad to see you guys are off. And I'm glad to have you on the show here, JB. And, we call it the hot seat. It gets a little uncomfortable, a little bit of squirmy. We try to make it as comfortable as it's a nice chair, actually. So
perfect.
We usually use the Iron Throne in there, but we kind of swapped it out. But since you're our guest, I'll give you pride of place here, JB. We talk about the full gamut of futures options complexes here. So it could be equities, it could be energy and crude, it could be metals and gold, it could be ags, it could be crypto, whatever floats your boat. So we'll let you pick what you want to talk about first here to kick things off, JB. Which complex is nearest and dearest to your heart, or perhaps nearest and dearest to the TD clientele over there?
I would say right now it's the index market, and I think it's just a very interesting one right off the bat. I think what you had here in the month of October, you're talking about an exceptional amount of volatility that came back into that marketplace. And what we find, and again, this is general news out there, is the index products, right? Most of our customers own S&P, they own Russell, they own NASDAQ, right, in their equity portfolios. And so for them, what do you do when there's lots of volatility in the market? We see a lot of them utilize the futures and the options on futures, especially NASDAQ is one of the ones that's sort of close to my heart right now because that's the FANG. And we certainly know that if you look at that FANG stock portfolio and how that's been moving, it's been all over the place. There's not been one single direction as it's been in a lot of the last earnings cycles.
So would you say that's the kind of the go-to, the silver bullet right now for the TD futures and futures options clientele is equities, and in particular the futures and options on NASDAQ? That's kind of their go-to right now?
S&P as well as the NASDAQ are the two. But yeah, definitely that's the go-to across the board for both TD. I talked to the CME a little bit. They're seeing those volumes as they reported out there all over the place. They're really, and the thing that's nice about the options is you have those weekly expirations now. So you can actually define your risk. And I know we'll talk a little bit in a second about it. I'm going to use NASDAQ and S&P, but Apple, obviously, earnings after the bell today, a lot of interest from customers. How do I adjust myself to get ready for this earnings report? Because whether it's positive or negative, you're still talking about a stock trading over $200. You may not want to go and put that much more equity into that stock. You can use the options. You can put up different types of strategies there, or the outright to hedge or actually take a little bit of a risk exposure to it.
I'm curious, obviously you guys, I like talking to the brokers because you guys kind of get a good perspective of what the retail clientele and the active ones in particular are up to. Obviously it's been a tumultuous month or two. October, we have the numbers here. I'll just break them down. The numbers are in, obviously, for October. You're talking about the NASDAQ, 9% drop in the NASDAQ, the largest monthly drop since November of 2008. We all know 2008 was a pretty volatile year in and of itself. S&P, a 7% drop. That's the largest monthly drop since September of 2011. I'm sure Sean will have the numbers. He'll fill us in a little bit on all things FTSE Russell out there. But what's it been like, engaging with the active clientele at TD during this time frame? Were they in the midst of the sell-off? Were they starting to capitulate a little bit, saying this is overdone? Were they diving in more en masse? Did you see any sort of aggregate trends you could see in the clientele that really kind of caught your eye?
Yeah, there's a couple of things I think that I would highlight. The first one being is you saw a lot of the customers, a lot of these guys owned, using FANG as the example, a tremendous run-up. You think about what Netflix, what Facebook, what Amazon, Apple, et cetera, they've had tremendous upswings over the last 12 months, right? So a lot of customers, they were trying to figure out, how do I take some of this risk off or take some profit? So I think what you saw a little bit occurring at the beginning of this month when that initial sell-off came was some profit taking. So maybe pulling some cash to the sidelines. But what we saw was really interesting was we then saw a lot of a rotation back into sort of the options on future space, specifically in the S&P and the NASDAQ, because that gave them an opportunity to hedge some of their existing portfolio. But in some cases, it actually allowed them to take a position with a small amount of cash, right? If you think about it, you can put up a couple $1,000s from a margin standpoint to do an S&P option or on a NASDAQ option, which still gives you that really nice correlation to what's going on in the market. For a lot of people, as they were seeing some of the ebbs and flows, they were jumping in and out from that perspective. It was interesting because that really moved away from the crude oil area, which ironically enough picked up some volatility as well. But it was interesting to kind of see that sort of rotation occur there. But really, indexes have taken really the front seat, I would say, from all retail traders' standpoint.
Yeah, it has been. We just finished a whole show talking about earnings and the big drivers going on there, and doing a volatility analysis breakdown there on our option block show. A lot of our audience is queuing in. It's hard to separate the macro from the micro these days. You got the macro trends of what's going on with China, what's Trump going to tweet next, and then you have the micro trends of who's reporting today. It's all kind of mixed into this heady, sometimes delicious, sometimes foul stew that is hitting the marketplace right now. Speaking of NASDAQ, I was just pulling up. By the way, listeners, you guys, as always, can follow along not just with the live stream over there, the Mixler feed, but also follow along with the reports we're using right now. CMEgroup.com/TWIFO, TWIFO. That'll get you access to the Quick Strike that we're using right now. Or log in, of course, at quickstrike.net. You can get it there. If you do that yourself, you'll see that the big player out there, the big action out here in NASDAQ options this week, NASDAQ hovering right around 70, 60 or so right now, and the futures coming in. 7,500 calls were in D7500s, lighting up the tape out here this week. In fact, of all the options paper out here, about a third of the paper coming in D's, which is interesting, surprising. Nick, we don't get a chance to talk NASDAQ here too often on the show, let alone skew and anything else. Anything catching your eye from a vol or from a skew perspective out there in NASDAQ land this week, or maybe any other equities that are catching your eye as well?
Well, I'll start with the NASDAQ since that's the topic that we're on at this point. I think the one thing I'd like to mention, and just based on some tweaks that we made to the TWIFO report, we have the ability to look and see how much the volatility has changed. Thank you for removing that echo. When I'm listening to myself talk and it's just behind me, it's very disconcerting.
I do that just to throw you off your game, sir.
Yeah, no, I've had that on overseas calls, and I just kind of completely lose train of thought in what I'm doing. So anyway, getting back to it. So one thing that we wanted to try to accomplish, and what we've been talking about a lot lately on the show, is just we see at the money volatility either up or down, and we tend to think, okay, vol's up or vol's down. But what we've been addressing, I think probably over the last 3 to 6 months maybe, is vol really down? Has the curve changed? That's why we talk about skew. Is the skew changed, that kind of thing. But we just changed one of the clicks on the report, where if you clicked at the money vol now, instead of showing the historical right off the bat, it just shows you what the current volatility curve looks like in comparison to the volatility curve at the end of last week. So you're really getting sort of an interim view of what's happening there inside the TWIFO report. And sure enough, this week in equities at least, and I'm going to right now I'm looking at I have the November contract up. I won't jump out there. I'm going to go closer, and I'm sorry, I had further out. I had the Nov contract up, and what we see is it says vol's down. Vol is down from the standpoint of the absolute volatility value, but the curve has not changed. The curve between the pretty much between the 59.90 strike and the 75.90 strike, and I'm not looking at that from a delta standpoint, I'm purely looking at that from a strike standpoint at this point, to say that the volatility just slid along the curve. So we didn't really see any increase. We just saw movement along the vol curve. And a lot of times people will call that the local volatility. So we're seeing vols change, but we're not seeing shifts in the curve, and we're not seeing a tremendous change in the shape of the skew either. So we're going to see some differences in the skew itself from an absolute standpoint, because as we move along the curve, our 25 deltas and our 15 deltas are going to shift. They're either going to become higher or lower, but the curve itself hasn't changed over the course of the week, especially given we had a pretty significant movement around this week, and it's been fun to watch. But vol is softer right now, but it's really the same from a standpoint that the curve has not changed, and we're just kind of moving that little bearing up and down the vol curve, and just sort of shifting around based on where the underlying is. So that's probably the biggest notice this week, and I've been checking that out just in not only on I was more interested in checking out on the indexes only because that seems to, we always talk about that skew not being all that exciting, and wondering why those quick skew numbers change based on the curve not changing that much, and that's why. It's because we're sliding up and down that vol curve. But that's kind of the big notice. So vol's down. When you look at it, there's a lot of red, but the reality is curve hasn't changed that much, and the skew, shape of the curve, all that kind of stuff, pretty much the same, which is what we've been seeing. We haven't seen a lot of, and maybe JB can weigh in on this because he's got a lot of experience talking to the people. We haven't seen we haven't seen big shifts in the skew. We haven't seen big scares. Even with the big move down yesterday, it got pretty ugly for a little bit there. Nothing's really changed.
Yeah, no, I think, Nick, you're dead on. It's been interesting to watch this sort of lack of volatility concern that's out there. I was just actually looking quickly on a side note, just was curious, where was the VIX, right? I mean, we're moving back down below 20 again on the VIX, but what I thought was ironic was you have gold up over 21 today. Right. Normally, we always talk about customers about where you see this movement to flight to quality. Is the volatility coming into the marketplace? Is it moving around? Gold has been has not participated in any way, shape, or form. It's almost as though, in many ways, the dollar has become much more of an interesting place for people to go, even maybe a little bit with the treasuries. But overall, the thing that's been interesting is you get these little mini spikes, but nothing that really holds that volatility standpoint. It just sort of seems like people have almost become accepted of these moves that are going on in the marketplace, especially these intraday moves when you talk about 200, 300, 400 point moves back and forth.
Yeah. Oh, go ahead, Joe.
I was just going to jump in and just say, the panic is gone. There's no panic selling anymore. This market is so high and so strong that these large, what would be historically large, momentous moves aren't scaring the investor today. It's just moves of correction, of profit taking. It's just the numbers are just so high. Panic has come out of the market, which I think is affecting volatility, right?
Yeah, Sean, since you mentioned the numbers there, I'd be curious. It's been a little while since you've been on. I broke down everything for NASDAQ and for S&P. What have you been seeing out there? You've been on the road for FTSE Russell for a while now. What are you hearing and seeing out there? Obviously, we talked for a while. FTSE Russell is kind of, and the Russell 2000, kind of an interesting test case for this because, I was just arguing with someone last night and trick-or-treating about this, of all things. I don't know how these things come to me, but they do. Where someone was trying to argue with me that the small caps are more prone to these micro shocks like trade wars. I obviously argue the latter, the other side of that. That's something you guys have been discussing as well. We've seen that play out in the Russell 2000 for quite a while. It was rally ho mode when everything else was in sell-off. But what's it been like out there over the last month? What are you seeing? What are you hearing anecdotally from Russell users? And what's been kind of catching your eye out there as we've seen this resurgence of volatility and sell-offs and market shocks and all the other fun in equity land?
Well, as you've seen through this year, the Russell 2000 small cap stocks have outperformed all the major indices up until this sell-off. But in terms of downside, they have outperformed as well. The Russell 2000 volatility has come back. The Russell 2000 is pretty similar story to the other index products. But with this resurgence of volatility, record volumes on our partner exchanges, CME Group and CBOE, options volumes on CBOE have doubled the average for the year for the month of October. So they're seeing a big resurgence of volume and open interest. They're averaging 100,000 plus days in the options on the CBOE. CME's volumes just continue to grow. It's just a tremendous success story. Volumes and open interest are growing. They're almost at 200,000 a day averaging in terms of contracts on the CME today. So just a great story in terms of volume. But
your road show is working out then, it sounds like.
We're getting the word out. We're getting the word out about
talking
FTSE Russell
here,
product.
going around the world, it seems to be working there. Speaking of, you mentioned the volumes over there, for some of the other things. You guys obviously have indices you guys measure as well. We were talking about it a little bit on the show last week. I know if you were some guy I don't know named Sean Smith was actually quoted in this release, so maybe you want to talk about this as well. These are, of course, your the buy right indices, and kind of talking about different ways people have been using, Russell products and the ways you can use them, and the conditional buy rights, obviously doing call overrights and things like that, and maybe some interesting numbers. Again, I touched on it a little bit on the show last week, but if you have any interesting clarity you want to add in terms of what you're seeing out there with these use cases and maybe how that's maybe accreting to volume over there in Russell land as well, have at it, sir.
These are fantastic indexes that the CBOE Global calculates for FTSE Russell and our partners. So when there's an option overlay component in an index, you can see the performance of that index using options as a strategy within that index. So it's a pretty exciting thing, and there's a whole list of them. And I think you went through the list of those products on your last show and the show before. So I won't.
All the fun buy right, conditional buy right, a lot of good stuff you can do out there. Check it out over there. FTSERussell.com is the place to go for all that good data. And since we're talking, we've already spent a lot of time on equities. Probably could do a whole show on equities, quite frankly, given what's going on out there. But the show is called Twifor. We got to hit other products as well. JB, you kind of alluded to it. So maybe we'll hit one of our other favorites next, which is, of course, Crude. Crude has been an interesting one to watch of late. You were kind of alluding to earlier kind of what people have been using it for. We've seen a lot of people out there that's a source for a lot of people out there to go for their I should say, their negative correlation, at least if you were maybe some diversification trading out there when they get out into the energy land. That trade hasn't been working out too well of late. Of course, this week we saw crude taking a little bit of a hit again. It's their worst monthly performance in over 2 years since mid-2016 out there in WTI, as you saw yet again another jump coming in U.S. crude stockpiles. We do have some stuff on the horizon, though. We saw November 4th is when the sanctions on Iran are supposed to kick in, so that, of course, could be a potential driver for volatility and some price action out there. But, JB, maybe of interest to a lot of your users. I'm sure a lot of them have the use case of equities and then probably a bit of crude or something else as a bit of a diversification tool. And at least over the last month or so, that hasn't worked out too well. The correlation to the downside in particular between WTI and crude has been, shall we say, pretty close to lockstep, about 80%. So I'd imagine a lot of your clients out there who like to dabble in the equities and put maybe a little bit of energy, for the safety net, for the safety valve when things go crazy. That hasn't been working out too well of late, JB.
No, it hasn't. It's been an interesting one. I was just going back and talking about this. You think back to the beginning of this month, we were at the high, right? We were talking 76, I think it was 76.90 is what the price of crude was. And at that point, the conversation was about what happens when we hit 80. Right, that was the big conversation. Was 80? What's the impact? Here comes some inflationary pressures. How is this going to really go hit the marketplace? And really, since then, you've had a downward march. Looking right there today, another tough day, down over 2.75% at 63.54. Really, what's been interesting for us as you've been watching traders is that they were always looking at crude as an opportunity for volatility. Right, you get big moves that had happened intraday. You get some geopolitical news out there. You get some stockpile information from both the U.S. and then obviously with the sanctions coming out from Iran. The question was, well, when does it start to bottom? Where does it bottom out and start to pop back up? And you're really not seeing that, which is interesting. And I think what's been curious is today you had a really big move that came really post the news that came out about Iran stockpiling crude and holding it till the global economy starts to fail and so forth. You really had that big sell-off happen here earlier, and we've been trying to look and see where exactly is the driver of this. Is this something that a trading program gone wrong? Is there some other geopolitical news out there? You did get bigger stockpiles. I don't think that's that surprising that we continue to have these bigger storage numbers coming out. But from a trading standpoint, the correlations and what we've been looking at really have completely broken apart from what you'd expect. And so you are still seeing some interest, but what we definitely have seen is some movement away, right? Some movement away from crude oil from a trading standpoint, moving into some other asset classes. And, I think because of the fact that idea that the correlation between crude was going to stay, it was broken, and now people are trying to figure out when does it come back into play? When should they then start to jump in? And right now, I mean, you look at this chart; it's a left or righter. There's no bottom on green coming into its play right now. It seems like.
Yeah, it's kind of funny. It's the old saw, right? When it all hits the fan, correlation goes to 1 across the board, and all these people who like to do a smattering of diversification here and there across assets, none of it matters because it all goes out the window. We've seen a lot of that lately, except for maybe crypto. We'll get to that maybe a little bit later down the road. I'm curious. Is it fair to say, JB, maybe for number one, obviously equities for a lot of your clientele in terms of futures, is number two crude, or would it be metals? What else? What would you say is the number two there?
It's crude, and definitely, and I think the reason it's crude, and if you go back to last year, is a great example, right? You just sort of had this slow march of the marketplace where it just was constantly going up. People were looking for some volatility. Crude was still giving you some intraday volatility, even though it may have been $2 or $3 of movement. That's a big move in crude, and people sometimes forget that when you think about that $10 tick value. So for us, we definitely saw and continue to see interest in crude. I think when it comes around to some of the bigger numbers that are out there, you'll start to see it pull off. I think tomorrow, non-farm payroll, huge number that's coming out. A lot of questions that's going to come out here for the overall economy. People are kind of pulling some risk off the table, maybe staying away from a little bit what's crude, especially since, as you said, the correlation and some of the news coming out does not seem to be pushing the market where you'd think it would go.
No, yeah, it's been an interesting week. Again, if you're following along, cmegroup.com/TWIFO, click on the energy tab, and then on WTI, you'll be seeing this, of course, the futures, like we mentioned, off pretty firmly this week, hovering shy of the 64 handle, 63 and change, off about 4 handles this week, nearly 6% out there. Vol coming up strong, as you might imagine. We've seen a bit of a bias to the puts of late anyway, so going into that part of the curve, that part of the skew, we're seeing Vol getting a nice bid. I'll let Nick break all that down in a second. In terms of what's been lighting it up out here this week, by the way, OI up strong, about nearly 3% this week in the contract. It's the 65 puts now in the money puts in Dees that were the long. I'm guessing a lot of this was earlier this week. Let me pull this up really quickly, and we could see exactly when this was. Actually, no, 5,000 hit the tape today, 8,300 hit the tape yesterday, and then almost 8,000 on Tuesday. So yeah, a lot of it was biased earlier in the week, but still number one by a large margin. The 65 now in the money puts here in Dees, followed by the more sane-headed 60 puts also in Dees out there, number two, and nice put strip out here, and 62 puts number three out here. A lot of action. Mr. Nick, does that surprise you that that now in the money puts are dominating the tape out here in WTI this week? If you're a bull though, don't be left dismayed. They're also the par calls, Dees 2019, nearly 9,000 on the tape this week, the 100 call. So there you go, a little bit of call love too. We can be equally biased in both directions here. Mr. Nick, fascinating stuff out here in crude, vol movement, skew. We got crazy options lighting it up. What was catching your eye out here in crude this week, sir?
Well, I always find it interesting when they make statements like crude has its worst month since. Like everybody wants the value of the contract to go up. I still will argue that all the time. Why do we want our commodity prices to? I understand it helps to some extent, but at the same time, it costs us more as consumers. So it's always interesting to me that that statement is made.
It's called clickbait, sir. It's a great way to get some traffic.
It is right, and I love the adjective or the adverbs they use, or the adjectives they use, or the just the general wording of a lot of the statements, like crushed, slammed, and you look at it, and like JB said, I guess we become immune to $2 moves to some extent because we just think of them and see them. But, I guess the general public probably looks at those a little bit differently if they're even paying attention at all. I think, we've been talking about it. I went back and looked for October. I tweeted the October TWIFO last month report, and the market's basically been heading south for the last 4 weeks, and with a little bit of firmness and volatility that we've seen, for the month of October. So let's talk about that from a standpoint of summarizing what happened then. So we saw the puts firm up a little bit, the calls get offered a little bit. We saw vol come up a little bit, and I think the difference here, we talked about the shape of the vol curve in the indexes before, and how it was basically just running up and down. On the vol curve, and here I think we see in the crude curve, I think we're seeing a little bit of a change in the shape as well. So that's something to consider. So when you're talking about volatility, you always want to make sure you're looking not only at the at the money levels, what we talk about and what we disseminate to everybody in terms of levels, but you want to look at how that shape of that curve may have changed or shifted, or if it's sliding left or right, or if it's moving, or if the tails are curling up, that kind of thing. But as far as, we've been talking about, we said that we thought there would be a range trade if it didn't continue its move up, like I think a couple shows ago through that 75 strike, that we would see the thing sort of, kind of trade around. And we did talk about the 65 to 75 range, right? Because those are the big open interest numbers. Those are nice round numbers. That's always going to be the highest open interest numbers. But, one thing that strikes me is we closed at 65.41 roughly yesterday, and then that was the big OI strike. And then after, as JB mentioned, and you guys mentioned about the Iranian news, there was a lot of trade around that 65, and that was the big open interest. We kind of went through that. So a lot of that trade in that 65 strike, there wasn't a lot of change in OI this week. So it was probably a lot of defense of that strike or hedging around that strike potentially. And then we went through it. So we broke a big barrier from an open interest support standpoint as well. So, I again, not knowing as much as people that trade the market every day, all the time, I'm just looking at it from a supporting options information standpoint. That to me seems significant now. And now we probably, I think, the next big strike is the 60 down. So we have the 60 to 65 and the 70. So I think our range may have shifted down, and I'll be curious to see whether we continue to see a slide down towards the 60 strike, or we just start trying to have a tighter gap, 62 to 68 around the 65 strike until we get something that drives us in one direction or another. So, again, October vol up, this week vol up with the continued slide. But I'm going to say, looking at the way that we've talked about it, and we moved along the volatility curve. We sort of slid up the volatility curve, but we also we saw the calls get pulled up. So we have a similar shape, but we have it like, the calls were pulled up. So if I tweet out this, I'm going to tweet out this January 2019 chart because it's a 40-something day chart. I'm going to push that one out there so you can see what I mean. That we got a little slide from the futures going down, so we moved up a little bit because that curve was tilted that way. But we also got the curve getting pulled up on the call side a little bit. So you guys can take a look at that and have the users or the listeners see what they think out there.
All right, we'll table more of the crude skew conversation. I believe we have a listener question about that a little bit later, so we'll get into more crude skew in a little bit. But I know, Mr. Nick, your favorite, your precious, is still the shiny stuff. So we'll make a little room for that on the show as well. JB, I'm curious, where do you get a lot of action in gold or silver or some of the other shiny stuff over there at TD Ameritrade? Is that a big complex for you guys?
Gold, you get a little bit of a pop. It's been an interesting one, though. You look at it, right, because gold really hasn't done much. It's kind of just been sitting around in that 1230 range. It doesn't really want to move all that much. Today, I think it's been its biggest move. If we were laughing. We were looking at this the other day. The biggest move it had was October 10th when you had this one big pop and then it slowly gave everything away. So we definitely see some interest from customers that are in there. I started to see it sort of shift around a little bit. It's moving away. I think that the perceived flight to quality has moved, I would argue, into the U.S. dollar, and that's where we're seeing more of our customers do that. But also I would actually say it goes back to some of the indice questions where the gold is interesting. People will be trading it a little bit, but they've kind of moved away and felt as though the U.S. dollar and the U.S. indices are actually a little bit more of a safe haven for them.
We've seen that people actually come on here and argue that the dollar is the new VIX in terms of it delivers more of a global macro kind of shocks to the system than VIX does. But that's an argument. That's a conversation for another. We'll save that for our volatility show as we get on into. Yeah, it has been an interesting week for gold. Obviously the flight to quality was there for a while. Certainly popping in today, kind of erasing some of the sell-off. Gold close to unch now, kind of on the week. So it can, a bit of a whole bunch of Sturm and Drang signifying nothing here at the end of the day here as we wind up at least the week for our show purposes here coming into Thursday. We're seeing vol out there, also a bit of a mixed bag out there in gold, which is kind of not surprising. Gold vol was kind of dead money for a long time. But of course, if you hedged it, as Nick used to argue, with some futures, he kind of did all right out there. I'll let him advocate for his puts or calls and futures in a little bit. And out here, what's been lighting it up out here this week? The big trade out here. So we're right around the 1235 or so strike right now. It's the 12.5 calls in Dees that were leading the charge here this week. So maybe showing a little bit of upside interest to see how much. Actually, there's a lot of back and forth because it was only slightly biased towards the opening. With the lion's share, actually, surprise, coming today with today's big run up. About 6,000 is about half of that volume printing today. The rest kind of scattered throughout the week. Then we kind of fall off a bit here to number 2, which are the 1,300 calls, which seem ever so distant now that we've been kind of languishing in this low 1,200 range for a while. 1,300 seems like very, very far away. 6,600 of those lighting up the tape this week with evenly kind of broken down. Most of that coming in the early part of the week. Then we got the 1,200 puts, number 3, 5,800 of those hitting the tape, also almost evenly broken up throughout the week. Then the 1,240 and 1,275 calls. Again, all of this pretty much in Dees out here, kind of taking up our top 5 here in gold. Let's just scan really quickly as we want to do. Oh yeah, we got some funky ones here, Mr. Nick. It wouldn't be a week in gold without some funky prints. We talked about some crazy ones in the past. This time it's the Dees 2019 2,500 strike, lighting it up to the tune of 5,000 contracts. 4,500 on Monday and about 500 scattered throughout the rest of the week. Pretty much interesting paper out here. So yeah, 2,500. That would be a good pop. That would be pretty much doubling of gold over the course of the next year and change. I don't know, Mr. Nick, what do you think of this crazy upside, and what else is catching your eye out there in your beloved shiny stuff this week, sir?
Well, I love watching this and talking about gold.
You are Mr. Goldfinger on the show, sir.
What's that? What'd you say?
I said you're Mr. Goldfinger on the show. You love gold. Got to get in every week.
Well, I just think it's as we mentioned, being the former options guy and a guy who liked gamma, I feel like gold, even though it's getting a bad rap in terms of its range trading. The range trading is just perfect, I think, from an options standpoint. We've traded if we look over the last month, 1186 up to 1240 something. Really good movement from a if you're paying attention and you're long some options and you pick your right spots depending on where you are in the range. We've talked about it for the last year about it being a decent trade, especially when vol's gotten beaten down, when we've gotten to the lower end of a range, and we'll have to see. The vol's not necessarily down so much right now, although it's getting a little softer as we sort of stay where we are up toward this 12, 30, 40 range. But as far as I'll have to look. I'm not quite sure that I like my long calls and short futures right now at this level yet. I think we need to go a little bit higher and see if we're going to get any follow through. But and my hedge puts at this point, I don't think I would be doing them at this point. I might go the other direction, sell puts and sell futures. But I have no say in that one way or another. But just from an overall volatility standpoint, right, we pretty much flat this week. And the skew, really not much change in that curve at all. So nothing super interesting in my book at this point, but I do like the fact that we're seeing movement. The shape of the curve is not changing all that much. It looks pretty similar. I might get some bid on the on some downside puts and a little bit of bid on the upside, like way out past the, maybe the 15s to the 5s, but I don't pay attention to those all that much. I'm more looking at the 25. But, until we're getting to the higher third of our range or higher quarter of our range. So until we see if we're going to follow through or if we're going to start to get soft, even though we had a pretty good movement inside the market today, I still think it's one to watch. If you want to learn how to scalp gamma, I think this is the place to be.
Speaking of places to be out there in the market, there's a lot of others we could hit on. We're kind of running up against it, so we'll condense it down, JB, into a couple. We have a couple more we want to hit. Obviously, I know you guys play a lot in crypto space these days. So if you got anything going on out there these days, actually crypto feeling a little bit of a win today. Not a huge move, still hovering around that 6,300 level out there in the CME Bitcoin future out there. Also, I know you guys play a bit in rates over there as well. So if anything's catching your eye, or indeed your clientele's eye out there in those two marketplaces, have at it, sir.
Yeah, real quick on that. I think on the crypto front, what you keep seeing is there's customer interest. That 6,000 number, right? That level just seems to be, that's sort of the supposed mining requirement is that 6,000 level. So you see a little pop here, and it seems to bottom and work its way back out of there. So it's been interesting, really strong, really good interest in it. What we're seeing, a lot of people trying to figure out where does it fit in their portfolio, which from my perspective as a retail guy, that's what you want to see. You want to see people not just jump in to trade something because there's some volatility. You want them to see the trade where it fits into their overall portfolio so that it's a longer term trade for them. From a rate standpoint, what I think has really been interesting on the treasury standpoint has been sort of the shift from the 30-year to the 10-year. Look, the 10-year we've been talking about, is it going to go to 3.2, 3.3, 3.4, 4 even, right? We're back at, 3.14 right now? We've been inching our way back, and what we're starting to see is a lot of interest in the 10-year weekly. So it looks like a lot of people have started to move some interest into that weekly expiration to try to have a little bit of a play with what's happening in the rates during the week, because you get a little bit of a pop here and there. So interesting for us to see that. I've continued to see interest in interest rates as you'd expect to see with the movements and obviously the interest rate hikes. But to me, the interesting part of it is really that 10-year weekly focus versus sort of that longer yield curve thought process of being on that 30.
Do you think that's a more of a surgical time frame in terms of strategy?
Yeah, I think what they're looking at there is they're saying to themselves, look, we're seeing 10 years coming across as that benchmark. Everybody's talking about it. Look, I jokingly say to people, average mortgage rate in the U.S., 8 years. So you combine sort of that 10-year product. So a lot of people focus in on that 10-year and really have been looking. And when you see it sort of bobble or wobble back and forth between the sort of 3.3 back down there, look, you go back and retrace where the 10-year is, we're back to almost having the conversation we had back in June and July. So at one point, we kept saying, are we going to get above 3? We got above it. We've held, but now we're kind of inching our way back. So it'll be interesting to see how much of an impact this has, because that was a rates discussion, was a big discussion, especially from the earnings side.
Yeah, it's fascinating to see, rates kind of becoming alive as a complex again. Who thought, 6 months ago we were talking about, action in the near-dated weeklies in the rates. They're like, what? No one's out there. It's dead paper out there right now. So to see that kind of becoming an interesting place, and obviously a big driver now. I was joking recently because people always used to ask me, like, oh, we'll know when the barometer is for when rates are a factor again, when we start getting inquiries from our audience about Rho again. When Rho starts to matter again, that's like I always joke it's the forgotten Greek. That it's like the redheaded stepchild of the Greeks. And all of a sudden we kind of just skipped that part. So all of a sudden Rho came back and hit everybody in a way no one expected when it just crushed the entire market. So we all kind of learned maybe an anecdotal lesson about the unintended consequences of Rho when it just wiped out the whole market there for a while. But I'm curious. I'll go back to something you said really quickly too about crypto. I know you guys are playing big. TD Ameritrade. We just had the RSX guys in here last week. I know a big investment in those guys. You guys have really kind of gone full bore into crypto. It's been an interesting conversation, what you mentioned, kind of where that fits in their portfolio. We saw a lot of people early on arguing that this is not a negatively correlated asset. This was the quote unquote digital flight to quality. That didn't really play out too well. And now we're starting to see kind of the other side of that where they're just non-correlated. And today's action kind of does lay it back. And we haven't really seen Bitcoin really move as much with the sell-offs recently and rally as hard with the rallies the last couple of sessions. So maybe there's more to that. Are you starting to see people starting to come around to that use case for Bitcoin as just a pure kind of non-correlated asset? Or, what kind of use cases are you seeing over there as people are flocking into the, and also on an anecdotal note, because I get this all the time, how many times do people ask you a day when we're going to get Bitcoin options?
I get the Bitcoin option to start off with all the time, and I'll be honest with you, I ask that question a lot. I think it's a great product opportunity that's out there. I think a lot of people are interested in trading that. So I've been talking to the exchanges and saying to them the exact same thing. Hey, look, when is that open interest and volume going to be good enough?
Maybe the two of us will finally listen one of these days. They raced each other out the gate for the futures. Yep. And then it's been radio silence on the options ever since, which is maddening to me and even more maddening to our audience.
Well, I think that's where the market wants it to go, and I think that's what you're trying to see. I mean, look, the underlying did what it was supposed to do, right? I would argue it's turned around, it got some price discovery, it removed some volatility in the market, and I think that the question ends up being is if I want to do something with the option side, what do? I have to leave the complex again, and I think this is one of those opportunities for the exchanges to really come in there and say, hey, look, the volume and open interest is there. Let's keep looking at it. I think to your question of what are people doing, it's interesting. It's really based upon where you are in your life cycle. If you're a millennial or you're a younger person, you're much more oriented.
You're all in. You're all in
right?
On crypto. Forget fiat. You don't have $1 in your wallet. You have a jump drive full of Bitcoin.
That's exactly it, right? That if you're someone else, you're looking at it from that store value standpoint. So what we really kind of see is a lot of people looking. There's some volatility opportunities, like we said, that sort of 6,000 to 7,000 range. You kind of keep having that piece there. It is completely uncorrelated, but you do have those believers that say, look, Bitcoin is actually a better indicator of what the market is doing. We kind of were joking around about it last week. We were looking at it. At one point, it felt like it was maybe leading, and then you kind of look a little longer and you realize maybe not so much. I think, again, remember, it's only an 11-month-old product, so I think it has some more maturity to go through. I think getting options in there and probably some other cryptocurrencies will really help round out where digital assets as a whole are going. You heard it from the RSX guys. I think you're seeing it as a demand out there overall. That's why you're hearing these other exchanges like Gemini, Coinbase, et cetera, say, hey, how can I get some additional product? Because people are going to use it. It's here to stay. The question is how do we make it transparent? How do we make it liquid? How do we make it feel as though it's a part of your overall portfolio? And that's what people are looking at right now.
Yeah, I lost track of how many people have been cycling through the studio of the last 6 months. What percentage of them is crypto? It's a ridiculous. it's a huge perspective. Even at FIA, which is a futures oriented show, I'd say half of our guests at least were a crypto exchange, crypto vendor, crypto this, crypto that. It's inescapable. Chicago has really become the trading hub, the trading mecca for crypto, which has been fascinating to watch in and of itself. That's a conversation for another day. We can go down that rabbit hole for many hours. But Mr. Nick, I know you like to watch some crypto. You're also an old school rates head out there. What's been catching your eye in either of those products of late, sir?
Well, I'll do both, but I'll go with the crypto first. So I just tweeted out our cross correlation matrix that's over on the CME Group website and also embedded in the Quick Strike subscription versions. And it's showing that, against all of the benchmarks, for the most part, there's not much going on. It's zeros or close to zeros across the board for the Bitcoin. I don't know if I would say I tend to disagree with what you guys said about the Bitcoin. I don't even think of it as a store of value or anything like that. I just been looking at it as a number that it's a number that has some activity that is that the futures have stabilized quite a bit that people like to trade because it's so I'm still my personal verdict is still out in terms of what role it's going to play in the market itself. So for right now, I look at it as a new index that people find interesting that trades in a lot of different places, but is sort of centralized to the SIBO and the CME, which I think the CME will ultimately dominate there just because of the ability that they have to. I talked about this before the CME even released their version, and before the CBOE did. The CME did that 5 coin. I think once they did that 5 coin, I automatically said, well, they're going to have a mini Bitcoin. So they'll go down to 1 coin. And once they do that, the CBOE's version is going to go away as far as I'm concerned. So I still look at it as a number that trades, and it's got some good activity. It's kind of rangy. If you look, you get the spike up and then your range, a spike down, then your range. So, there's I don't know what kind of plays per se here right now make a lot of sense. But as far as the options coming into play, I think until you get a good solid exchange like the CBOE or the CME that has options on these, I just don't like. There's options obviously on Binance and those kind of things, and Bittrex, but it just feels strange when you look at those exchanges and try to trade them. It just feels unregulated, which I guess to some extent it is. So store of value, not sure. A number that people recognize and can talk about. You probably can't get people to say where the S&P 500 index is, but most people know where the Bitcoin is. So I think it's just a familiar frame of reference. So that's my take on the Bitcoin.
Before you keep going, really quickly, I want to hit on you. You just tweeted out this great chart, and people should check it out if they're not following you at Quick Strike One. No C out there. I will retweet it at Options Insider too, showing, because people are always debating what the correlation is of these assets. You actually have the numbers here showing what it is, the correlation to various asset classes, not just equities. Obviously here, what's your thoughts here? I'm looking at the numbers myself, so it's kind of interesting. What are your thoughts here on the debate, Bitcoin, at least to equities, negatively correlated, positively correlated, or uncorrelated? I think I know where you're going to fall, but where do you fall, sir?
I mean, I know it's got a positive number, but I would say that there's across the board, there's within that margin of error, there's not much correlation.
Yeah, there's
right?
nothing really.
Yeah, it's a lot of zeros or small numbers. So there's a little bit of positive on the equities, but I would write that off more than anything else. A little bit of negative on the metals, which makes sense that those two would be, a little opposites. But generally speaking, I look at that as, it's sort of separated itself from the other one. That's why it's interesting. I think, the CME has it as in the index, in the equity indexes. I think the right place for it is in its own sort of asset class. I think it, and I think people are starting to talk about that. I thought I saw something about JP Morgan or Morgan Stanley started out. They have now a cryptocurrency asset class desk specifically. So it's been separated out as its own sort of entity. So I think there'll be times where it correlates better. I think I would say there tends to be not. I would say there is some correlation, but not much, just from a number standpoint. But anyway, I think options will be fun, but it's just like any other. It's just going to be like any other thing. It'll just be a number that you can trade. At least that's what I'm thinking. That's why people want it. It's because they're most familiar with it. People want to have what they're most familiar with available. Anyway, if we go to the rates, you guys were mentioning how the 10-year is always. I've always felt like the 10-year has been outside of the euro dollars. Being a euro dollar guy, so I always had an affinity for those. But that was a very chunky trade, and it was very much based on what was going on with the Fed. Back in the 90s, there was a little bit more intra-week or intraday activity based on when the Fed came in every morning at 10:30 and whether they bought or sold or put money into the market or took money out. There was some intraday activity, but the 10-year I think is really is where a lot of where they've seen such huge open interest and huge growth in the euro dollar. But the 10-year is. There's lots of trade there, and of all the things that we've talked about, JB, the 10-year weeklies are sort of the example of where everybody would like the weeklies to go. And I know the indexes have good weeklies, but their weeklies are good from the standpoint of they turn the serials into weeklies, so they're inherently going to have good open interest and good activity, even though they have those Mondays and Wednesdays that have good OI and good activity. If every asset class could have weeklies that trade like the Treasury weeklies, I think the exchange would be super happy here because, we have the one-day option had 250 plus. The one that just came on the Wednesday even had 20,000. And then the one expiring next Friday has almost 300,000. So, and then the third, the next one has 50,000. So good liquidity there. Great trading there, plenty of opportunity. And, this one, I would say this from the feeling we had of the futures just going south and the yield just going up, it's kind of changed. I've changed my feeling there. It just feels much more like somebody mentioned earlier. It seems like we're sort of trending here a little bit, not much direction in terms of going up or down, just sort of staying the course until we see what's going to happen next.
We got direction, though, because we got to get going right on into our final segment. It is time for the futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback segment, the portion of the show where you guys take the reins, questions, comments, insights, making fun of Nick, all that good stuff. You hit us up with it. You know where to find us. Let's keep going. I'm just kidding, Mr. Nick. They love you. All right, let's start off here. That's actually a good one for you, JB. Glad to have a broker on the show today. This comes from Taylor N. He wants to know, do most FCMs offer the ability to go delta neutral easily on their platform, or do you still have to go through the hassle and risk of legging? As our broker representative here, JB, obviously, he's probably talking futures options, but you can take it from whichever way. How easy is it someone to come in, maybe they want to do puts and futures, something like that? How easy is that to do on the TD platform?
For the TD standpoint, obviously, and I apologize for the plug, it is very, very straightforward, very simple, but I would also argue that's because we built the software product as an options trading product, right? So when you say most FCMs, a lot of them are using what I would say are traditional tools, and that traditional tools, they're just starting to evolve into that option space. So for us, yeah, it's very, very simple, very basic, very straightforward. Couple of different ways you can do it if you want to do it on your mobile device. I mean, look, I was just laughing. I was doing a couple trades here on my mobile because it's that easy.
We've inspired you to trade here into the show. I like that call skew out there in WTI. I'm going to pick up some of that.
That's exactly what you were doing. No, exactly. So I would say, yeah, with a couple different ways. I would say if you're interested in coming to it, come on in there. We can actually walk you through. But I think you're seeing more and more FCMs move into the space. Options on futures, in my mind, I've said this a lot, it's kind of good. The opportunity is where equity options was 10 years ago. A lot of people starting to look into it. I think just hear how little we could get through today because there's so much interesting stuff in there in that marketplace.
I'm glad to hear you say that because that's kind of something I've said for a long time. You guys kind of came through it the other way. You came to it from the ultra competitive world of equity options where there's a bunch of retail brokers, a lot of big dollars fighting tooth and nail for every account. So you have to have the best, platform offering. You have to have the most cutting edge tools. On the equity options world, there's a lot of blood red water. Everyone's fighting it out tooth and nail. FCMs, you're right. I jokingly say they're usually on the options functionality side, I'd say 5 to 10 years behind. That's catching up now as they're starting to see they want to be able to attract that, active options clientele like we have tuning in here who they want. They demand the bells and whistles. And if you don't have it, guess what? They're going somewhere else. So they're starting to catch up to that. But I think you guys kind of came to it the right way. You started with the bleeding edge stuff, then took that and applied it to the futures option stuff rather than the other way around, which usually tends to not work out the best sometimes. Let's see. All right, here we got time for. Let's do some quick ones here. This one, Mystrio. I like that handle. He wants to know, I think this came in earlier this week before the pop started in their equity. He says, are we done? Is this the beginning of the end of the bull? I guess this is the question everyone has. Seems like for right now, no. I don't know, Sean, you're the resident equities guru. Obviously you can't prognosticate wildly, but I'm sure you're getting a lot of this out there in FTSE Russell land as well. Is this the death of the bull, Sean? Or are we done completely?
I'm gonna take it from the approach of from the index side, and that is, people will continue to invest. People are going to continue to make money, and they're going to want to put their money somewhere other than in a very, very low interest-bearing account, and they're going to keep investing in the marketplace. So I'm an opinion that the market's going to keep moving, but I'm also bullish on investing. So.
I guess you're in the right job then. I don't know, JB, is this the death of the bull? I'm sure you had a lot of this more histrionic stuff coming in late last week, early this week. Hopefully this guy didn't get out on Monday, because if he did, he missed a nice little pop here. I don't know. I'm sure you had to talk a lot of people off the ledge. Maybe not so much. I was just kind of giving Sean a hard time. Not so much is it the end of the bull, but what are you counseling people in this kind of this kind of market environment in terms of maybe maybe take a step back from the abyss? What are you guys doing for the hand holding over there at TD Ameritrade these days?
Absolutely. I think this is really about don't overreact to what's going on in the marketplace. Create your risk tolerance. We talk about this all the time. Identify your risk tolerance, put in your stops, put in your stop losses so you focus in on there. I think what's interesting is, look, you've had a couple big things coming out of the market. You've had a very strong economic news coming through, for the most part, housing being the exception to it. But you have Apple earnings today after the bell, which I think is a huge thing. It's at 13% of the S&P. It's got a big implications on NASDAQ. But the other thing is tomorrow is non-farm payroll. So you've got two really big, what I would say, financial numbers that are going to really give you an idea of where this market is and what's going on there. The sell-off and the pull-off that's happened on there, some people will tell you healthy, some people will tell you that it's the end of the world. I think what you have to do is be careful to get too caught up in the noise. You got to figure out what your risk tolerance is, focus on your risk tolerance, don't vary from that tolerance. And then more importantly, look at the news and look at the information that's coming out there. A lot of interesting economic news coming through there. By the way, don't forget, you got some Fed information coming in next week. So there's a lot of things that are going to give you indication of where it is. Is this going to be the typical bull that we've had for the last year and a half that was on there? No, I think you're getting into the new norm. Is going to be some volatility in the markets and some sharp moves. So you have to be prepared and you have to have yourself protected.
Nick, you get the last word here, sir. Even though you're not in the studio here, is this the end of the bull? Are we done, sir?
Well, I look at it a couple ways, right? So you mentioned Apple, right? So that's a big part of what when we see the big ups and downs in the market, we see some disparate movement based on some of the bigger equities that are part of that index. I think even though the market has run up over a period of time, we're still up there, right? We're still better than we were a couple of years ago. So, is the bull's not continuing the run, but we're still, the equities are still in a good place. So that would be the first thing. The second thing is, if you pay attention and you're watching, and what I try to do myself, there's a lot of good value out there. Even though there's been a run up and, we've gotten, we've gotten days where we've gotten hammered and then come back, there are still undervalued individual equities out there outside of the index, which I agree with Sean. People are going to want to invest. People got to put their money somewhere. They're not going to put it in a low interest bearing, bank. It just doesn't make any sense. So there is going to be the influx there, but there's still good stuff. There are good stocks that have gotten hammered that are good buys, which is always going to be available for either option plays or for value investing, or for, if you really like something, you can sell puts against them at a different strike, because if you're going to buy them anyway, why not try to buy them lower? So take some premium in and sell puts and have that be your next level. So if you do get a breakdown, you're gonna get it at a better price than you would have. Or if you don't get a breakdown, you're gonna make some premium because you sold some premium against it with the put. So I think there's going to be some sideways things and some bending. I don't know. The break will happen. Does that mean it's bad and over and to sell? I know that some things got to happen where these institutions got to sell when like GE got below 10. So a lot of people had to unload, which makes it worse, those kind of things. That doesn't mean it's necessarily bad to get in at the levels where we are, even though the bull, quote, so to speak, is over. So I don't think it's done it might be done from a big ridiculous run up, but there are little bull markets within each of these markets because there are individual plays that you can make that are going to make you money regardless of what the general market trend is.
All right, everybody, that music means, unfortunately, we've come to the end of how fast an hour flies by when we're talking every futures options market under the sun. There's a bunch we couldn't get to. I know all you guys out there who want ags or maybe fluid milk, whatever your product of the week is, you'll send us your angry email. We try to get to them all. It's only an hour show. We can't do 10 hours, even though it would be fun. Maybe that'll be the new version. 10-hour TWIFO, where we hit every product you want. But before we go, let's go back around the horn. JB, we'll start with you as our hot seat guest. Hopefully it wasn't too uncomfortable for you here in the hot seat this week. I think you did an able job. If listeners want to learn more about what you guys have cooking over there in TD, or maybe you want to give us a little hint of what's coming down the pike from you guys over there at TD, now is the time, sir. The floor is yours.
Well, thanks a lot, first of all, for having me. It's great to be here. Sorry it took me so long to get here. You guys do a great job. I love the focus on the options.
We're so far out of the way here, in this West
Loop. You're four blocks from me.
Yeah, I know. It's so far.
No, it's great to be here. I love what you're doing, the education, the focus on the various products there. I think it's important for you as listeners to get this into your daily routine as you're paying attention to what's going on in the markets. For us, you can always reach out to me. I'm on Twitter at JB_Mackenzie at TDA. Also, you can reach out to me via email. More than happy, JB at TD Ameritrade. We love talking options on futures, love talking education. Looking forward to coming back here again. Mark, appreciate you having us on.
Now that you know where it is, you could come find it. And same deal for Sean. You bring gourmet burgers, you're welcome. You're welcome back in. Anytime I see Sean's face, it's like, oh no, I'm in trouble now. I gotta bring gourmet burgers. But Sean, as I was just joking before, but if you want to be in gourmet burgers, you're allowed. And then what else? You guys, obviously, you're doing the road show a lot. You're talking to a lot of people out there. FTSE Russell and Russell 2000 are kind of on everyone's lips these days with the tariffs and everything. What can we expect from you guys coming down the pike, sir?
Expect more volume, more open interest. Expect us to just continue the dialogue about FTSE Russell and the products. We're across all asset classes now. As you know, we bought Citi and Citi Yield Book. So we are going to be coming down the pipe with cross asset class product. So be on the lookout for that. But, we didn't bring up that magic word today, RVX.
Oh,
so we didn't
you're
talk
right.
about
I did not.
Russell volatility.
Is there something new cooking in Russell volatility land? You're getting me excited here.
Cooking, but
we can do another hour. I got another hour in me. Let's do it. Let's do it right now.
Looking at that spread between VIX and RVX. So just wanted to continue.
There's too much going on in equities. Otherwise, we could hit that. But you're right. I'm getting excited. I'm going to talk to you after the show. Maybe we can squeeze out some news. But yeah, I'd love to have more players to talk about.
Thanks for having me again this week.
I'd love to have more players to talk about. It was a pleasure having you. More players to talk about in the world of volatility. It is always welcome. So we're staying tuned for that. And last but not least, Mr. Nick, I know you got the big day coming up. One more plug for the old missus, sir. Go for it. We'll allow it here today. We'll get a little political on the show. If you want to do that, obviously, and wherever you are, listeners, go register, go vote. Give the lady a plug. And then what else is cooking in the land of Quick Strike, sir?
No, I'll plug the general vote. Get out and vote, regardless of who you're voting for. Make sure you're taking your time to go. There's early voting. There's regular voting on Tuesday. Get it done because we deserve to take advantage of that privilege that we have. As far as what else is going on. Like I say every week, we should be getting a couple cool expiration calendar tools and event vol calculator tools coming out here shortly. There's going to be some good new watch tools. I know we launched OPEC Watch for the last meeting. There'll be a new version of that coming out very soon, so keep an eye out on that, cmegroup.com/OPEC Watch. And that will give an indication whether things stay the same, whether they increase or decrease. So some good stuff there. And then, as always, if you got any questions, look for us over at bantix.com, BANTIX.com, or go over to cmegroup.com/quickstrike for the free tools. And if you got any questions, just shoot me a note on Twitter or to Mark, and he'll forward it over to me. But lots of good stuff coming, and more stuff's even after that, which we can talk about when it's finally ready. So looking forward to it.
I'm looking forward to that as well. Check it out. Bantix, it's BANTIX.com or quickstrike.net or cmegroup.com/TRIFO. You really can't miss it. So many places to go to, and you too can play around with the cool tools that we use throughout the show here every day. And throw Nick some love on Twitter. He does like it. Even though I see your feedback. You guys do a lot of that already. Maybe you can dial it back. He's getting a big header on the show. I'm just kidding. To check it out, cmegroup.com/TRIFO, of course, to learn more. And on behalf of Mr. Nick and Sean and our guest JB and our friends over there at CME, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for sending in such great questions, for joining us live. We love you guys too. And we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.